Welcome back to Investing Talk Podcast. Today we're plunging into a question on many of your minds. Is American Airlines a good time to buy right now? We're going to break down their Q2 2025 earnings, their comprehensive annual 10K report, and the latest market analysis. We really want to unearth the deeper story for you, sifting through the info to get the sharpest insights. Before we get into all the details, if you find our discussions helpful, please do hit that subscribe button, leave a like, maybe share your thoughts in the comments. It really helps us out. And hey, if there's a specific company you'd like us to analyze next, just let us know down below.
Yeah, definitely let us know. We've gathered a pretty comprehensive set of sources for today, looking at, well, everything from American's financials to the technical chart indicators, and even what's coming up next for them. Our goal is really just to equip you with the full picture so you can make your own informed decisions. It's a complex industry, airlines, always navigating global winds, so understanding all these pieces is absolutely crucial for any investor.
All right, let's pull back the curtain on American Airlines then. Our analysis, as you know, always starts by grounding ourselves in the fundamentals. Because ultimately, a company's financial engine, well, it dictates everything else. Their Q2 2025 earnings just landed, and there's definitely a headline figure that demands our attention, isn't there?
There absolutely is. The standout insight here is American Airlines' record high revenue. We're talking $14.4 billion in Q2 2025. That's a truly significant number, especially, for an airline coming out of the pandemic years.
14.4 billion. Wow.
Yeah. And it wasn't just a fluke either. It was really driven by robust and sustained leisure travel demand, which has frankly surprised many analysts. Plus, they had impressive performance specifically in their premium cabins. To put a finer point on it, their Atlantic passenger unit revenue, that's basically the average revenue per passenger per mile flown, that climbed a strong 5% year over year.
Okay, that's specific.
Right. And while the explicit GAAP net income, the official profit number, wasn't immediately shouted from the rooftops in all the early reports, the tone from management strongly suggests ongoing margin recovery. And that's a positive signal for future profitability and overall financial health.
That $14.4 billion is, as you said, an eye-popping number, a real testament to the travel rebound. But is it purely a green light signal, or are there maybe underlying currents or costs that make that headline figure, well, less straightforward than it appears? Because let's face it, when we talk about airlines, debt is almost always a central character in the financial story.
That's a really important question, and you've hit on the core challenge for, frankly, many legacy carriers. If we connect this to the bigger picture, American Airlines certainly has an elevated debt load, no question.
Yeah.
Looking at their 2024 10K filing, that's their big annual report to the SEC, kind of their financial truth serum, their long-term debt and finance leases totaled approximately $38.2 billion.
$38 billion. Okay, that's substantial.
It is. It's a big number that requires significant resources just for interest payments, let alone repayment. However, it's not all grim. They ended 2024 with a substantial $8.1 billion in total available liquidity. That includes cash, short-term investments, and undrawn credit lines. So that liquidity is a critical buffer.
Great, a cushion.
Exactly. And they also generated a solid $3.7 billion in operating cash flow in 2024. Now, after you account for about $2.1 billion in capital expenditures, money spent on planes, facilities, this still led to positive free cash flow.
Okay, so cash is coming in the door even after spending.
Precisely. So while the debt is high, it is improving post-pandemic as their operations generate more cash. It offers some relief, some breathing room.
So the financials reveal, well, a bit of a mixed bag then. Impressive revenue gains, yet that substantial debt remains kind of a looming shadow.
Right.
This naturally leads us to ask, in such a, let's be honest, brutally competitive industry, how does American Airlines truly differentiate itself? What are its unique weapons against giants like Delta and United?
Yeah, that takes us right to their competitive position. American is undeniably one of the largest global carriers, going head-to-head with Delta and United. Every passenger, every route is fiercely contested. Their primary competitive advantage, I'd say, lies partly in their industry-leading AAdvantage loyalty program. It actually saw remarkable 7% growth in active accounts year over year.
Loyalty programs are huge for airlines, aren't they?
Oh, absolutely. But what's truly insightful about AAdvantage isn't just keeping passengers flying with them, it's the financial leverage it offers. These loyalty programs often operate as incredibly high-margin businesses within the airline. Think billions generated through credit card partnerships and selling miles.
Right, it's almost a separate business.
Almost.
Yeah.
It creates this revenue stream that's remarkably resilient, offering a critical financial cushion and a diversified income source that, frankly, can sometimes be more profitable than actually flying passengers. It's kind of counterintuitive, but it's a powerful way American tries to stabilize itself against the industry's notorious volatility.
Interesting point. What else?
Well, they're also consistently investing in fleet modernization. They're speeding up retirement of older, less fuel-efficient jets and bringing in newer models like the Airbus A321neo and the Boeing 787 Dreamliners.
Which help with fuel costs, presumably.
Big time. It's not just about passenger comfort, though that's part of it. It's a strategic move to significantly boost fuel efficiency, reduce maintenance costs, and expand their long-haul capabilities. All of that directly impacts the bottom line and their standing against rivals who might be slower to upgrade. However, it's vital to remember the industry itself is incredibly competitive, super sensitive to volatile fuel costs, and constantly navigating complex labor negotiations. Those are sector-wide challenges.
Got it. Sector-wide headwinds. Okay, we've dissected the company's inner workings. But for many of you listening, the burning question isn't just how the planes are flying, but how the stock is flying. What have the charts been telling us about American Airlines' recent price movements?
Right, let's look at the technical analysis. This gives us a snapshot of the stock's recent behavior. As of September 11, 2025, American has been trading in a pretty clear recent range of, say, $12 to $14. The current close was around $13.39.
So range-bound, basically.
Yeah, pretty much. From a technical perspective, we've identified fairly clear support levels down around $12, $12.50. That's where the price tends to bounce up, suggesting a floor. And then you've got resistance up at $14 to $15 where it often struggles to break higher. That's kind of the ceiling right now.
Okay, useful levels for traders.
Definitely. These levels can be really useful for traders and even investors watching short-term movements, giving potential entry and exit points.
Okay, so we have these price ranges, these key levels. But are there any broader indicators suggesting a clear trend right now? Or is it a bit more ambiguous, maybe just consolidating or uncertain?
Yeah, a key piece of this puzzle, technically speaking, is that the price is currently trading below its 200-day moving average.
And it usually means?
That's a classic technical signal that generally suggests a medium-term downtrend. So for you, the listener, it's not really looking like a strong upward trajectory in that time frame.
Okay, medium-term downtrend. What else?
Well, if we look at other indicators, the Relative Strength Index, the RSI, which basically measures the speed and change of price movements, it's currently in the neutral zone, somewhere between 40 and 55.
So not overbought, not oversold.
Exactly. It's not screaming sell now or buy the dip. And the MAPD, another momentum indicator, is slightly negative, which kind of reinforces that neutral to bearish trend. Plus, volatility remains elevated compared to pre-pandemic levels. That's pretty typical for the travel sector still, given the ongoing uncertainties we see. Adds an extra layer of risk, especially for short-term plays.
Right. So technicals are looking kind of neutral to bearish, maybe range-bound with higher volatility. Okay. So we've covered the fundamental health and what the stock charts are telling us. Now let's talk about the more immediate and future landscape. What recent news or announcements have really impacted American Airlines? And maybe more importantly, what should we be looking out for in the coming months?
Yeah, let's look at the past 3 months, because there has been a lot happening, and it gives us clues about management's priorities. Back in July 2025, they reported those record Q2 earnings we discussed, with a GAAP net income of $599 million, that's the official profit, and an 8% operating margin. Pretty strong execution despite the challenges.
Right, the record revenue quarter.
Exactly. They also announced a significant premium economy expansion for their key transcontinental routes, New York to LA, starting in October. And this isn't just, slightly nicer seats. It's a strategic move to capture more high-value travelers, boosting potential revenue per seat.
Targeting that premium dollar. Makes sense.
Definitely. Moving back to June, they unveiled new winter routes to places like Sun Valley, Santa Maria, and interestingly, added over 22,000 extra seats just for major sporting events.
Chasing specific demand spikes.
Precisely. Shows a keen focus on event-driven travel, trying to capitalize on those high-yield patterns. And then in May, we saw plans announced for a new terminal at DFW Airport, that's Dallas-Fort Worth, signaling long-term investment in their hub. Plus, they promoted new flagship suite premium seats for summer travelers, again, aiming right at that lucrative premium market.
So a lot of activity. Fleet, routes, premium offerings, infrastructure.
Yeah, a lot of forward-looking initiatives designed to drive both revenue and customer experience.
On the surface, it sounds like American Airlines is doing everything right, investing in key areas, expanding profitable services. But often, a flurry of activity doesn't automatically translate into market confidence. How are analysts and the market actually digesting all these moves?
That's a great point, and it leads us right into market sentiment. Interestingly, despite the record Q2 revenue, the market response was actually, well, somewhat muted.
Huh. Why do you think that was?
Partly due to broader sector headwinds affecting all airlines, things like fuel cost worries, economic uncertainty, just weighing on the whole industry. And if you look at analysts, the majority currently have hold or neutral ratings on the stock. Their price targets are generally clustered near $13, $14.
So not predicting a big jump from here.
Not really, no. There also hasn't been significant insider buying recently, which can sometimes be a strong signal of confidence from management. And social sentiment, looking at what retail and institutional investors are saying, it remains cautious. It's largely focused on those persistent concerns, the debt burden we talked about, those ongoing union negotiations, which could mean higher labor costs down the line, and just the general worry about muted fare growth, especially if the economy slows.
Okay, so caution seems to be the word from the market side. Beyond these past events and current sentiment, what upcoming catalysts should investors be aware of? Are there specific dates or potential developments that could, move the needle for Americans there?
Absolutely. There are several key dates approaching that everyone should probably keep an eye on, as they could provide new data or shift that sentiment we just discussed. First up, October 5, 2025. That's when the premium economy service on the JFK LAX route officially launches. We'll see if that performs as well as hoped. Then around October 30, we'll see an ETF rebalance. Exchange-traded funds adjust their holdings then, which can sometimes cause temporary buying or selling pressure on stocks like American.
Okay, ETF mechanics. What else?
Critically, the Q3 2025 earnings report, that's expected around November 14. Analysts will be scrutinizing this hard for guidance on international demand, how they're managing costs, and their capacity plans heading into the holidays.
The holiday season outlook, always key.
Always. And even before that, we'll get a Thanksgiving holiday traffic update around November 10th. That serves as an important sort of real-time gauge of consumer demand and pricing power. And then December 1 is the 13F filings deadline. That's when we get a peek at what the big institutional investors, hedge funds, mutual funds have been doing with their American Airlines shares.
Lots of dates to mark on the calendar. Anything less concrete? Rumors, possibilities.
Yeah. Beyond those scheduled events, there are always whispers, potential wildcards. We're hearing talk about potential strategic partnerships, maybe an expanded code share deal with an Asian carrier. That could open up new markets. Then there are, sometimes resurfacing M&A discussions. Maybe a merger with a regional carrier could boost domestic presence, but brings integration challenges.
Always the M&A rumors in the airline space.
Always. There's also chatter about possible overhauls to the Advantage program enhancements or dilutions could really impact customer loyalty. And, of course, adjustments to their aircraft order book, depending on economic pressures, that signals long-term strategy shifts.
Okay, so a full plate of known dates and potential developments. So we've laid out this comprehensive picture, the strong operational recovery, that lingering debt, the technical signals, all these upcoming events and potential rumors. With all this information on the table, what are the primary risks for American Airlines right now? What should potential investors really be mindful of?
Yeah, let's crystallize the risks. To put it in perspective, that elevated debt load remains a huge stock-specific risk. That kind of debt doesn't just mean high interest payments. It can severely constrain Americans' flexibility if demand softens or if there's an unexpected downturn or other unforeseen costs pop up. It just limits their ability to invest or weather storms.
Less wiggle room.
Exactly. Then, labor contracts also represent a substantial future cost risk. Successful union negotiations, while obviously good for employees, often mean higher wages and benefits, which eat directly into margins and can be hard to predict accurately. And of course, the airline industry is just inherently cyclical. It's highly sensitive to macroeconomic shocks like recessions and incredibly vulnerable to fuel price volatility. A spike in oil can just erode profits quickly.
Beyond the company itself.
Right. Beyond American-specific issues, rising interest rates increase debt service costs across the whole sector, making that already high debt even more expensive to manage. Geopolitical disruptions or, new health scares could cause rapid and dramatic demand drops, as we've certainly seen before. And let's not forget regulatory and environmental policy changes. Things like carbon taxes or stricter emissions standards could drive up compliance and operating costs significantly down the road. It's a landscape fraught with variables.
Definitely a lot to weigh there on the risk side. So given all these factors, the record revenue, the high debt, the technicals looking maybe a bit weak, the upcoming catalysts, and as you just outlined, this whole host of risks, what's the overall investment thesis for American Airlines right now? Is it time to buy, or should investors maybe proceed with caution? What's the bottom line here?
Okay, boiling it all down. American Airlines clearly shows operational recovery. Record revenue, improving unit revenues, that's commendable given the last few years. However, the elevated debt levels and those unpredictable industry headwinds really significantly temper its attractiveness as an investment right now. Our analysis, weighing all this, gives it an overall rating of, say, 5/10, kind of middle of the road.
5 out of 10. So not a strong buy, not a strong sell either.
Pretty much. While extreme lows in the stock price might present short-term bounce trading opportunities for those who are agile and have a high-risk tolerance, mind you, the structural overhangs are significant, especially around that debt and the ongoing labor costs. They really constrain its upside compared to competitors who might be better capitalized, have less debt, more flexibility.
So maybe more for traders than long-term holders.
I think that's fair to say right now. American Airlines looks best suited for short-term trading within those volatility ranges we discussed, rather than as a core long-term investment at its current valuation and risk profile, as of today, September 11th, 2025. For most long-term investors, the risks currently seem to outweigh the potential rewards. So the core insight here, really, for those of you weighing a long-term position, is that American is this fascinating study in operational excellence that's being constrained by historical leverage. They're running an incredible race, operationally, but they're still carrying this heavy backpack from past decisions and just tough industry dynamics.
A heavy backpack. I like that analogy.
Yeah, and it isn't just about American Airlines, right? It's a potent reminder for investors that even stellar performance can be overshadowed by balance sheet realities, especially in these capital-intensive cyclical sectors.
So you've heard the numbers, the trends, the news, and the risks. American Airlines presents, as you said, a fascinating case. Strong operational recovery, battling significant historical debt, and these persistent industry challenges. It really is a high-stakes balancing act.
Absolutely. And the key takeaway here, I think, is that understanding the full landscape, everything from their loyalty program strength and those premium offerings, right down to the looming debt and volatile fuel costs, is just crucial for making any kind of decision here. For you, the investor, it's really about carefully weighing that impressive record revenue against those persistent headwinds and the cautious sentiment that's currently floating around the market.
Right. And as you consider whether American Airlines fits into your own portfolio, maybe think about how these various factors might shift in the coming months. We've got those Q3 earnings coming up, holiday travel reports, how will the company's progress or lack thereof on debt reduction play out, or maybe one of those speculative catalysts we touched upon, a partnership, an M&A rumor. How will that interact with the backdrop of global economic changes? It's definitely a dynamic situation. Staying informed, keeping all these elements in mind is absolutely your best strategy. We always encourage you to do your own due diligence and see how these pieces fit your personal investment goals. So the final thought maybe is, what new information, what development will truly change the flight path for American Airlines, and will you be ready to react when it happens?